Hi, I'm Roger Montgomery from the Montgomery Fund and welcome to this week's Video Insight. If you had a look at Qantas' share price last week, you might be wondering what's going on. On Thursday there was a spectacular rise as the company reported its full year results. And to give credit where credit's due, Alan Joyce is doing an excellent job. This is reflected in the balance sheet where cash went up slightly, debt went down slightly, and surprisingly, shares have been bought back. All of this reflects an improving cash position and stronger cash flows. But while the short term looks good, thanks in part to the investment of aircraft in previous years, the long-term economics of this business won't actually change. I was interviewed last week by Bloomberg, and prior to my interview with Bloomberg, Alan Joyce was interviewed and was posed the question, you are described by some analysts, Alan, as a brilliant rower, but no matter how hard you row, there's always going to be a leak in the side of the boat. After a brief pause, Alan responded by saying he's doing the best job he can at controlling the controllables. One of the uncontrollables is a big one. It's the economics of the airline. If you cast your mind back to the year 2000, Qantas had $1.9 billion of capital contributed by shareholders and $900 million of retained earnings. The company also had about $2.5 billion or $3 billion of borrowings. So imagine that was the year you kicked off the airline. In that year, the company generated a profit on that $1.9 billion of contributed capital and $900 million of retained earnings. The profit was $514 million. Looking at the statutory numbers for 2013, and Qantas has generated a profit of about $200,000. So looking at that decline in profit and comparing that decline in profit to how much additional capital has been contributed, we saw that in 2000, $2.9 billion of capital had been contributed by shareholders, and now that number is $5.9 billion, $4.7 billion of directly contributed capital and $1.2 billion odd of retained earnings. So the economics of the business are deteriorating, and in a couple of years' time, the company will have to replace aircraft again, and so further investment will be required. And also remember this, the $514 million of profit that was generated in 2000 and is now $200,000, that's also declined despite the fact that the debt has gone up from $3.1 billion in 2000 to $6 billion now. Imagine you had a business where you contributed $3 billion of extra capital and $3 billion of extra debt, and the profits have been wiped out. Those economics are hard to change. Everything else is peripheral. I'll see you again next week, and keep following us on Facebook and Twitter.